Welcome to another episode of Markets Dawn Europe, an audio podcast on financial markets for European-based professionals. A minimalistic solution to the information overload in mainstream and social media. This is what you need to know today.
Morning. The week began with sharp moves in both directions in Asian markets, with Japanese equities selling off, while Chinese stocks are rallying significantly. The Nikkei 225 is losing around 5%. The broad Topix index is down 3.3%. The CSI 300 is jumping more than 6%, and the Hang Seng is gaining 3%. European and US equity futures are showing no reaction and are flat in early morning trading. Japanese markets are responding to political news that monetary policy hawk, Shigeru Ishiba, will replace Kishida as the country's prime minister. Also, industrial output for August, released today, surprised analysts with a steep drop of 3.3%, mainly due to disruptions caused by weather conditions. The yen appreciated sharply on Friday and is unchanged today, while bond yields are rising, with the 2-year yields up by 7 basis points to spot 38%. In China, the central bank announced new stimulus measures last night to revive the property market, including a 50 basis point reduction to all existing mortgages, a cut in down payments, and easing restrictions for home buyers. These measures follow data earlier this month that showed new home prices dropped at the fastest pace in nearly a decade, and that real estate sales plunged 18% year to date. The CSI 300 real estate index is rallying 7% today. Both manufacturing PMI indicators, the official NBS, and private Caixin surveys, released today, reflect that factory activity remains in contraction territory for a fifth consecutive month, while the services sector slowed sharply. Chinese markets will be closed on holidays from tomorrow until next Monday inclusive. In other Asian markets, stocks in Taiwan are losing 1.5%, while Australian equities are advancing nearly 1% to an all-time high. The key economic release on Friday was US PCE inflation, the Fed's preferred inflation measure, which slowed to 2.2% year-on-year, slightly below estimates and significantly lower than the 2.5% recorded a month earlier. The core PCE measure was 2.7%, in line with consensus, and a touch higher on the month. Markets are pricing in a slightly higher chance for a 50 basis rate cut versus a 25 basis cut by the Fed in November. Headlines. Austria's far-right Freedom Party is set to win yesterday's legislative elections with 29%, followed by the People's Party with 26.5%, as the pro-Russian and anti-establishment party gets closer to ruling the country. Israel widens its offensive against terrorist groups and launches airstrikes against Houthi rebels in Yemen, only days after the attacks in Beirut to kill Hezbollah leaders. In the US, Hurricane Helen caused at least 100 casualties, severe floods and damage in its path through North and South Carolina, after making landfall in Florida on Friday. Data to be released today: GDP, mortgage figures and house prices in the UK. Retail inflation in Germany and Italy. GDP and unemployment in Denmark. In credit ratings, Israel was downgraded 2 notches by Moody's on Friday to Baa1. Monetary policy meetings this week: quiet in developed countries, and in emerging markets: Colombia today, Poland tomorrow, and Romania on Friday. Thanks for your time, see you tomorrow.
Visit laconicbriefs.com to subscribe to our newsletter, including this audio podcast with an extended script if you prefer to read, plus performance tables and charts, all in one place. Delivered straight to your inbox every morning, Monday to Friday.